Welcome back, everyone, to the Economics of Real Estate. I'm Dylan Silbernagel. This is my partner, Matthew Gizzie. Matt, how you doing, buddy?
I'm good, man. I'm good. Had a whirlwind couple last days, getting a deal closed. But other than that, it's been good. How about you?
Yeah, I've been getting over a bit of a cold, so that's been a bit of a downer. And I discovered my limits because, as you do when you're in a good mood, you're singing in the shower, and I found myself running on a breath. So I'm not I'm not out of the woods yet, but we're getting there. Tell me about this deal that you're putting together, because that's what we like to hear.
Yeah. So originally started working with the clients, they're investors, which is a rarity in this market, I guess. But to be fair, if you're an investor, there's fantastic deals to be had in this market right now. And there's a lot of opportunities for you if you're looking at the right places and you're getting the right deals. And we had started off about a month and a half ago in the Keswick area. That's kind of where they thought that they were going to end up. So we were looking at options there, and then we started to look at options in Bradford. Even put in a couple offers on both places, but ultimately didn't win them. But that's okay because I believe everything happens for a reason, and a fantastic opportunity presented itself in Newmarket. They were able to beat out a couple other offers and get a fantastic price for a property in a very desirable, quiet area that has so much upside potential for them. So it was a great win for them.
That does sound fantastic. I like that it brought them further south than where you'd originally started looking, as you saw that kind of downward pressure on prices. But also,
Yep.
I'm hearing still running into multiples on those properties, so the right stuff is still bringing people to the table.
The right stuff's bringing people to the table. I will say that I think there's still a lot of people putting in lowball offers.
Yeah.
But I think if you've done your calculations accordingly, two of the properties that we put offers in my opinion, were priced a little bit below where I thought they would actually sell for, and and I've been in two multiples where we ended up 20 to 30,000 below asking, even with three offers
Even
on the table. So just because there's an offer on the table doesn't mean it's going to go for close to asking or
yeah.
above. Put the price that you are willing to pay for the property with the conditions that you want, and there are homes out there selling for those.
I hope everybody was listening to that. Even in multiple offers doesn't necessarily mean that it's going to sell over the asking price. That's exactly the experience that you've seen. And Matt, that's exactly what this show is about, is making sure that we are providing some insight into what's going on in the market, not only to help our real estate colleagues, but to help educate buyers and sellers as well. And so we're going to jump into it today. And Matt, as we always do, let's start with the lending side of things and talk a little bit about these interest rates. So we just got our announcement the other day from the Bank of Canada. We did get a hold. It's kind of what you and I had anticipated. It was kind of a coin toss to be if it was going to happen or not, if I remember right from our what we were seeing in the predictions. But nonetheless, we get a hold. So here we are.
Yeah, I think inflation's still a little bit sticky. I think they're still a little bit worried about just how much the tariffs might affect prices. Also, the government of Canada has come out and said, hey, you know what? We're not going to put a budget out this year, this spring. We're going to wait till the fall. And I think one of the key reasons they're waiting to the fall is because they're going to be spending a lot of money, and they're going to be putting a lot of money into the economy for multiple reasons. A, we let the resource sector, uh, basically falter over the last 10 years. And I think the new government realizes we can't just be reliant on housing in this country
Mhm.
to drive the GDP. We need other avenues of income and business. So they're going to be pumping a lot of money into that. They're also going to be pumping a lot of money into the sectors like the steel and aluminum sectors that are going to need help while we negotiate with the Trump administration as to coming up with a deal. So I think there's going to be a lot of money potentially put in the economy that's going to affect interest rates as well, because it might to the upside a little bit. Cause some inflation, and
Mhm.
also wages. Wages have still been up there a bit. We're seeing Canada Post coming out looking for 19%. A lot of different unions, a lot of different people are asking for bigger pay to help with inflation, but ultimately, that can cause a little bit of inflation as well.
Right. And so again, that's important to note. So as you've got people sitting on the sidelines wondering what's happening with rates, this is where we're seeing that stickiness a little bit, particularly when it comes to the inflation, as you mentioned. Now, talk to me about our 5 year government bonds and how this kind of impacts our fixed rates as opposed to the Bank of Canada, where we're looking more at our variable side options.
Yeah, I mean, fixed rates bond, it's bond investors.
Yeah.
It's it's basically who's willing to buy the government debt. And the higher that interest rate goes, basically means there's less and less people that are willing to buy it. So they have to offer up a better rate. So we can see it's been sticky at the top there. Bond investors are a little bit worried right now because of how much government debt there is out there, and it's a little bit risky for them because they, in their minds, are like, okay, is it worth the rate that I'm getting to hold this bond from a government that's severely in debt? And we're starting to see the prices of gold go up because central banks are rotating some of the US dollars, some of the US treasuries, and would rather hold gold because they see that the money printing is going to potentially to have to start continuing
Yeah.
to pay the interest off on the previous debt, and interest rates are ultimately not going to get down low enough. So we're seeing in the bond market, it's still sticky. We're still back to where we were in 2010.
2010. Yeah. Yeah, right here. And then if for those of you that were around selling real estate in that time or buying and selling houses in that moment, this is where we start to see a bigger increase in average home price. We saw these kind of go to the upside as these rates were impacting and coming down. People were getting cheaper lending. And then, of course, in our 2018, 2019, you saw that go up. Matt, you talk about this segment a lot, whereas I was talking about the impact from the fair housing plan here, but it all happened and it all kind of combined. And as you can see, these climb up. We saw the market really slow and struggle. We saw prices come down. And then this is obviously where we ended up in 2023 as they started to increase from 2022.
The thing with this chart too, what's important is, if we go all the way back to 2001, all the way to 2021, this was a market in where every 5 years you could refinance your mortgage, you could pour all your old debts into it, right? Get a
Mhm.
cheaper interest rate so that it was an affordable amount. And then the next 5 years, you could just repeat the cycle. We're at a point now where it's too high, and a lot of people are starting to have to refinance for the first time in a very
Mhm.
long time at higher interest rates, and they can't roll as much debt from credit cards, auto loans, and stuff like that. So that's
Yes.
definitely one thing that I'm keeping my eye on with rates being the way they are right now, is because in 2020, the last, we were down basically at the lowest we've been in a very, very long time. I don't know how far back we could go to go see that amount, but now you're rolling over here, not rolling even lower with the interest rate. So it is something I'm keeping an eye on.
Yeah. And here we go. We can see, I'm going to jump right to it because we were just talking about those bond yields and how they impact those fixed mortgages. And we can see this is now the average across 10 lenders. But last month we were sitting at about 4.3. We're now at 4.34. So 3 basis points higher. The 5 year variable, same, 4 basis points up. And as I always say, this is my favorite one that we put together, Matt, in terms of just kind of keeping an eye on what the Bank of Canada is going to do. So we did get that hold as expected there in June. And we have now, it looks like July, 82% chances when we will see our next cut there on July 30th, bringing us down to 2.5%. Here's the other big change since April 30th was the last time that we updated this. It's now a coin toss again, really, that we get that final cut of the year to bring us down to 225, which in December wasn't even thought of, wasn't even on the books at all. But come January, it was in there, and it looks like it might be disappearing.
Yeah, it's looking like one cut this for the rest of the year.
Yep.
The bond market's kind of suggesting that as well because again, the stickier inflation. The 5 year variable will drop below the 5 year fixed, but I think with some of the projections that I've seen, the 5 year fixed might have already bottomed for the year.
Mm.
Um, and it's very possible that it keeps rising for the various reasons that I mentioned with tariffs and with government spending. Um, it almost feels like the government's going to have to inflate its way out of the debt that it caused during the pandemic. It's the only way it's going to make it affordable. So um, I think if you're in a situation in the market where you're hoping for interest rates to come down, I don't know that that's going to happen unless some catastrophic event happens in the economy, some black swan event. So I think if you're a seller and you're up against the ropes right now, you probably should start to put it on the market. And I think if you're a buyer, this is your moment. This is what you've been waiting for a very long time. The opportunities for you are going to be fantastic, I think. And they are right now, and they are. Do I think housing prices are going to steamroll down? No, I think maybe a little bit, a couple more percent on the way down, but this is a fantastic opportunity for investors, first-time home buyers, if you can get the help to get into the market now.
Yeah, there might even be a smaller window here than it seems like, because if we are going to see some interest rate pressure to go back up, um, now maybe the sweet spot where the prices have come down the most that they're going to come down. Like you said, there's still likely some little fluctuation that's going to happen, but your interest rates might be in the sweet spot. So depending on how you're looking at it, this could be a nice little window for those guys that have been sitting on the sidelines.
Yep.
All right. All right, let's talk to us. Talk to me a little bit about the business confidence and the nice little increase, a little rebound that we're seeing here.
Yeah, we fell off an absolute cliff. Now that's when the tariffs were happening. We went all the way down to 25, but we've shot back up, which tells me that small businesses are starting to see a little bit of optimism. They're starting to feel that with the new government in place in Canada, they now have someone to negotiate with Donald Trump. And I think they're a little bit more confident that something might get done there, but also we're starting to open up the borders within Canada where Ontario can trade with all the other provinces. And so there's additional business there for small businesses that can potentially be had. So I think you're starting to get a bit of an uptick for those reasons.
Perfect. Now scroll into me here and let's talk about the average pricing plans because we're seeing a roll over there in a positive way for us, and wage plans just slightly as well. So what do we got going on there?
Yeah, so if we look at April, the average price plans for the cost of their products and services, they were looking at around a 3.5% increase. We can see now that's kind of come down. We're down to 2.9 and coming and falling down. So there's the expectations that prices on goods and services would have to increase at a very high rate. Let's like the average is around
Yeah.
2.1%. We don't want to see it that high. Number one. Number two, we don't want wages and price increases to gap
To
themselves too
deviate.
much like we saw in the pandemic. That's
Yeah.
what causes the ability for people to afford their groceries and whatnot. That can get very, very stretched. So it's good to see that wage increases are still in the historical averages at 2.2, but we need to see this forward expectation on prices to come back to that
Yeah.
median average as well.
Exactly. So here's we're seeing inflation tick up, through 2021 and onwards, really, and then slowly, we were working our way down as we had all those interest rates climbing. This isn't inflation. I'm just saying this is what the small business is forecasting in terms of their prices having to go up. So we're going to call it inflation. And then as of this year, the start of the year, when all the tariff talks started happening, small business was like, everything is going to cost more for us to get these products in here to be able to sell this. It's going to go way up. And now we're starting to see that come down even more so, obviously, here in the month of May, which is a fantastic sign. Yeah, Matt, thank you for putting this one together. I think this is very critical for us to be keeping an eye on because at the end of the day, it's people that buy homes. It's the jobs. It's do we have extra money? Do we have that spending ability, or are we living paycheck to paycheck because everything has gotten out of control
And
in terms of
this
how
and
expensive it
this
is?
correlates back into the bond market as well. Like, yeah, we've rolled over to 2.9, but it's still 2.9. It
Yeah.
needs to be at 2. And the gap in between the pay and the prices of good and service is still too high. It has to come
Yeah.
down and go back into the 2 before I think the government, before the bond market's going to be comfortable rolling those rates down.
And you know what's funny is, or not funny, what's disappointing is you and I have spoken a number of times now how coming through the end of the fall last year, it was looking like we were going to start to see some forward momentum in the real estate market, more so than we had seen previously. And even if you look at how our wages and our cost of goods were starting to look, even on the business forecasts here, they were coming together much like way better. We were back towards almost like 2020 or pre 2020 styles, and then that big spike happened, right? So we got to get back on track where we were. I'm hoping this could just be a blip for let's call it 3 quarters of this year, thinking optimistically. But we were trending in the right direction pre the start of 2025.
We were, and it's the Trump effect.
Yes.
It's the housing market was going the right way, everything was going the right way, and then Trump got into power, and everything kind of deviated. But I do think if we can get a deal done with Trump, that's going to alleviate a lot of this pressure. We might even see more interest rates. It's all going to be how much the government ends up pumping into the economy, because that has an inflationary aspect to it as
Yeah.
well.
So, not to get too off topic here, but in your opinion, is that something that they've kind of got to get just right? Like, clearly, we need to dump some money into the economy, but there is an extent at which point that now we have more inflationary concerns.
I mean, everyone follows the U.S., and it looks like the big beautiful budget from Donald Trump is going to add an additional $5 trillion, which means that all the other central banks and all the other governments around the world can start adding that as well. Because if the U.S. is pumping it in, so can you. So that's why I think there's going to be this big spending in the economy. But what we want to see is fine, keep interest rates elevated. But if we're going to have that additional spending, we need pay raises to go up as
To
well.
go with it.
They need to come off that 2% line if the governments are going to be dumping all this money into the economy to start stimulating and getting productivity going again.
Yeah. Well, let's keep an eye on that one and see how it pans out for us. All right, let's take a look at active listings because this is a big thing that you're hearing in the news. You're seeing it in the headlines. And if you're a realtor out there, you're just looking at the amount of options. And if you're on the listing side, you're looking at the amount of competition out there. Now, particularly in the condo market, we're here looking across all regions. We have outpaced all the previous 15 years in terms of active listings, and we are just continuing to grow there as more and more properties are hitting the market. And specifically, the real challenge and why this graph keeps going up is that the sales volume is just not matching the new listings coming on. We've got a lot of stuff that continues to sit and roll over month to month. And that's why we're seeing that active listing there count. Now, when we take a look at condo apartments and condo towns in Peel, same story, continuing to rise, outstripping our previous 15 years. Now, looking at our sales volume, here's why that active listing is staying so high is we're below a lot of the last 15 years, minus our 2020 dip here when the lockdown first started happening, and then the market kind of took off. So, yeah, that's what we're looking at in terms of sales volume. That's in Peel. Matt, why don't you talk to me a little bit about Waterloo, as I know it's an area that you were watching previously for investment opportunity as well.
Yeah, I think they've got some great schools out in Waterloo, Kitchener Waterloo, and they also have a great tech hub out there. So there's a lot of people coming to the country who are going through the local schools to get into the local tech jobs. So there was a boom of investors who came out and said, "Hey, you know what? There's some great upside here." The problem is they overbuilt clearly, because now we're sitting on a staggering amount of um, of places active
Yeah.
listings. Now, the sales in Waterloo region aren't as bad as what we've seen in Peel. We don't have a chart for it,
Yep.
but it is quite high. There is some absorption there, but even with that high absorption, the active listings are still starting to pile up. And I know I've got one client who purchased a new build condo in Waterloo, and a lot of these places had incentives where the first 2 years the rent was guaranteed. And I was having a conversation, and he was saying, "Oh yeah, you know what? The condo cash flows, even with all things considered, but that's going to start to end soon." Number one, and then number two, they also offered extremely low maintenance fees there as well. And he had mentioned on the phone as well. Maintenance fees are starting to accelerate to the high side. And that's another big issue that we're going to see in the condo market as a whole is during the pandemic, all these corporations had money set aside, and then all of a sudden inflation went 50, 60, 70%, and the money didn't grow by that much. It was in a very secure holding, maybe making 5% a year, 4% a year. And now you've got this shortfall because everything to fix within the condo building has gotten that much more expensive. So when you're dealing with condos, you really have to look at their budget, at what they have in their accounts. What's
Mhm.
going to have the windows been done is probably the biggest thing to look at. If the windows haven't been done, they only got $1 million in there. Do not go near that place. So it's very critical for not only agents but buyers to really, really, really dig deep into a condo building to make sure it's not going to be a debt trap for you in the future.
Well said. I'm glad you brought that up because you and I did a transaction together last year where we were representing the same client. And that was one of the big things that we were talking about with them is look, this condo's been undergoing a lot of maintenance. They are doing some of these big projects. And it's just not, the reserve fund has not kept up with what the new cost of these repairs are. They had budgeted X amount a few years ago. Everything was on track. It's no longer matching with what that output is going to cost. And
Yeah.
again, that's something that buyers definitely have to be watching out for in today's market when looking at condos. And I'd say that that is a big challenge. I think predominantly for older buildings right now. Some of the newer buildings might be able to squeak by for a little while because they don't have those repairs coming due. But for
Mhm.
the older buildings, even though they benefit from having all that time to build up the reserve fund has not kept up with inflation to the same extent. And I
Yeah, I
think
think
that's a
it's important to look for a place that's done a lot of its updates if it's older, but also it has a very good, reputable property manager running that place as well.
yeah.
You do not want to put yourself in a situation where you buy a property and then all of a sudden you're being told that you need to kick in an additional $20,000 to help do all the upgrades in the building. That's happening right now, and a lot of people are facing that, unfortunately.
Yeah, no doubt. All right, let's talk about York freehold pricing and the market there. So we did see a slight downturn there in median price. So we're down 0.5% month over month. Um, it's not what we usually see this time of year. That's been the big thing as we've been talking about the spring market is it just hasn't landed the way that it usually would. The statement I keep seeing is dead on arrival, and that's kind of how it feels for as we compare it to previous spring markets. So to see that slight decline there, not great, but we are seeing transaction volume slowly start to tick up a little bit. Not in the numbers that we're used to seeing, but it is ticking upwards. We did see median days on market come down a little bit month over month, but we are up 38.5% year over year. So this time last year, Freehold House in York was selling in about 13 days. Right now, we're sitting at 18 days on the
Yeah, I
market.
mean, we saw a nice 13% uptick in sales, but the problem
Yeah,
was we saw a 22% uptick in the new listings. And
yeah.
that's kind of why prices have been, down a 0.5%, just because the new listings is outstripping, that transaction volume, unfortunately.
Exactly. And so it's nice to see this uptick on a month over month basis, but you got to remember year over year, we're actually down 14% in terms of the comparison to the same time last year. So we're
Yep.
still not where we want to be there. And when you look at the charts, as Matt was just saying, here's the uptick in new listings. It's funny, we had a little stall there for March and April. It did not go up too much. Everybody was kind of sitting on the fence there for a second with those freehold listings in York. We see a big push from April to May, but that big push with the lack of sales, this is what it does to our active listings. This thing is just on the uptick of a roller coaster. It's at the start of the ride, just going on a steady stream right up. We haven't seen any adjustment here to roll over in terms of those active listings. And the reason for that is our sales volume has not kept up at all with the active listings. So we're not removing enough inventory from the market. And again, we're only just outpacing our 2020 lockdown months, which
If you go
will,
back to
yeah,
the new listings volume,
yep.
this is typically where we peak out for new listings. So next month's going to be a very interesting to see, did we
Yeah,
accelerate even further to the upside?
exactly.
Because if we did, we're going to be kind of going into some uncharted territory where we're accelerating for the first time in 16 or 15 years
Yeah,
uh,
from
to
May to
the
June.
upside in June.
Yeah,
So that's something to keep an eye on for sure. Or do we finally start to roll over and follow the way it typically goes for the rest of the year?
yeah, yeah. Great point. I'm glad you brought that up because we are just seeing things that aren't trending the usual way. So here we are in terms of median sale price for freehold homes in York, and what we're seeing is it's kind of been holding steady. But what's important to note is we are below our previous 3 years. We are just hanging out just above 2021, and of course, look at that big gap from 2020. This is how quickly prices went up. Look at how close we are in these fields here, but from 2020 even just to 2021, that was the increase that we saw in median price, and
Yeah.
that's why this correction has felt bigger than some of the past. But we're cruising there, Matt. I think that we're coming up to a time where we're going to be below 2021 by September, for
Mhm.
sure.
Yeah,
If not
yeah,
August, but September for sure. I think that anybody bought in those last 4 years in terms of median price, you're going to be looking like you're below the value that you were purchasing at.
yeah. And
Uh,
and to be clear, like I don't expect us to get anywhere close to where we were in 2020. There's just
yeah,
far too much capital that was pumped into the market that still exists in the market. Um, and again, the government spending is going to make its way into the economy. That will stall out prices and then start to make them rise at some point. Um, I think it's possible it could be later this year. It's just going to depend on how many people renew their mortgage and are able to continue to afford it. Pay
yeah,
has gone up. In 2020, the average hourly income in Canada was $31, $32. It's $37.50 now. So people's incomes have increased as well. And mortgage rates have come down a little bit. So I think there will be a lot of people that can absorb the cushion, but there will be some fringe people that don't. We'll have to see how much that is.
yeah. I think as we go through the year, you'll start to see where that price really started to accelerate. Right, we had really high prices and we had really low interest rates, and coming into next year and the year after that, that's going to be the 5 year mark from those people that were at the peak. So anybody in that 6 to 12 month window is that fringe group that you're talking about that will be impacted the most in terms of the higher debt load that they took on at a lower interest rate that is now they're renewing at something that is probably double. Like a very common one I'm hearing is somebody that was just under 2% when they purchased, and now they're renewing and they're at 3.99 or 3.98. Is a story that I'm hearing quite commonly these days.
I was also speaking with a mortgage broker the other day who was saying there was a lot of people that took shorter term interest rates over the last couple of years, 1 year, 2 year, 3 year, and he's
Yeah,
been rotating a lot of them into mortgages over the last 6 months.
yeah,
So I think some of those people have already started to put their properties on the market. Um, so I don't expect like the last half of the year to be this big massive push, but I think the trend could potentially continue for the rest of the
could
year
be
at
there.
least.
Yeah. And then when we come into our months of inventory, we are looking at, sorry, my computer's in the way. We're looking at 5.83 months of inventory currently for our freehold market there.
Which is the highest it's been for quite some time.
Yeah. Yeah. Again,
That's a new high.
our charts for today going back to 2011, 15 years is a great span for you to understand what's going on in the market, especially as we have had our downturns here. We had our 2017 correction, and we had, well, we're coming off of the financial crisis back there in '09. So by then, look at how we were even just a couple years later in comparison to our 2022 rate increases to where we are now, right? All right. This is another one that we've been watching closely, is just looking at the percentage of homes that are selling over the asking price. And we did roll over there in kind of March and April, and it looks like we're ticking up just a little bit there, Matt.
We're ticking up because I'm finding with a lot of the properties that I'm working with or have been involved with, if there's a lot of buyers coming through people's homes, but they're not
Mhm.
biting. And then when you decide to like maybe take 150,000 off the price and relist it, all of a sudden you're getting a lot of activity. All the buyers are starting to come, and you're actually getting offers right where you thought you were going to end up in the first place. So I think there is a little bump up here because buyers are sitting on the sidelines and going, "Hey, I got a lot of opportunity in here. I'm not in a rush." But if they fall in love with a property, you reduce the price, they then decide maybe I should act on
Yep.
this. I don't, that's the house for me in the location. I'd hate to see it go. And for some properties, that's what's happening. And I think that's
Yeah.
what's reflecting in the above list price. But in reality, it's going for market price or just below market.
Yes, exactly. Exactly. This is more about, is a low pricing strategy working right now in the market, and how the percentage of homes that are selling, how many
Yeah.
are using that strategy that are making it work. And Matt, you hit on something key. One of the challenges this market is seeing is a lack of urgency in the sense of buyers right now, because they are spoiled for choice. There is some
Yeah.
uncertainty in the market. So there's no real urgency on their part. But like you said, if you've got a product that can move, you create that urgency by setting a date and putting a price attractive enough to get people through the door. And like you said, it's not that the home's going to sell for that much more than it would have the other way. It's more so you're just getting to market value, but you're having somebody come forward and say like, okay, I am going to act today, because if I don't, I could lose this one that I've fallen in love with.
Yeah, I think perceived value for a buyer walking into the property, if it's not there, they're
Yeah.
not biting. There's plenty of other options. If they walk through the front door and you've priced that property very well and competitive, and also understood we're not even in a raising price market, we're in a declining market. The buyer is like, they're seeing the value right away, and they're more inclined to put an offer in and get the ball rolling on that.
Yeah. All right. Let's talk about the different categories that we're looking at in terms of where a lot of these sales are happening, right? So what are the price points that we're seeing this in? And this has stayed pretty true. That million to 1.5 in York region is where we're seeing the bulk of our sales volume right now. And it's funny because that's just when we look at freeholds and how much prices have increased over the years. Like that's just where the bulk of them sit now. There was a time just a couple years ago where this was the townhome market, that million to 1.2. So it's adjusted a little bit. You're getting your freehold detached 2 stories now in a lot of places down here, but nonetheless, this is still where the bulk of it is. But now, in terms of looking at our active listings, yeah, still makes sense. That's where the bulk of them are. But we have a ton of luxury stuff sitting there at over 2 million, which, funny enough, is our fourth biggest price bracket when it comes to the sales side. But when you look at months of inventory and the amount of options, there's over 1,000 for sale and 88 of them sold last month. So,
Yeah, I think there's plenty of appetite for anything below 1.5, especially anything below 1.2. It's that 2 million plus market that's just getting hammered right now.
yeah.
And I think that's, you're starting to see the bulk of the inventory, the active listings in that group of houses, right? So I think, we've seen a nice steady um, line for where prices are. It's just that bulk of inventory, 2+ million, is what's getting churned out and turned down a bit
Yeah.
in this market.
And it's interesting to see that we're seeing more growth here in the 1.5 to 1.8 in terms of stuff that's available, as well as coming through on the sale side. Because there was a time when you and I were breaking down the price categories for every area, we were seeing almost a missed gap there in that 1.5 to 1.75. It just was kind of overlooked. Like people weren't quite seeing the value on some of those properties. So
Yeah,
it's
I'm trying to
interesting to.
look and bring this chart over from last month. So we can see that the active listings for the 2 million plus has fallen. Maybe people have taken it off the market.
Yeah.
And even 1.5 million and above, we've seen some decreases in those as well. So I think some people are taking their properties off the market and just saying, hey, you know what? I don't really have to sell. Maybe we'll just stay put. But there's still a lot of people that have to move their property, and they're the ones that are still out there trying to get
Yeah.
something.
Or then they trickle down to the next price category below them there. So let's now talk about York and the condo market, because this is a big one. And I think what's important to note about the condo market and why we put a lot of emphasis on it is the way our housing market works and the way buyers kind of move through the generations is it all starts with the condo for a lot of people. That's kind of your starter spot, and then you move up. And so if the condo market is faltering and there isn't equity growth there for those first timers to then move on to the semis or the towns, which then filter up to the detached, to then the trophy detached, is we're missing our entry point. We're missing the top of the funnel to keep feeding the rest of the market. So as sellers in the condo market are struggling, we're seeing that filter down through, and that's why then the towns start to get hurt a little bit, right? And so I was looking at this the other day, and there's some fantastic detached homes that are doing really well in Aurora. And then you look at some of the townhomes, and nothing's happening on them. But what's happening is the smaller detached that they're selling are going to the bigger detached, but the towns aren't selling because there's not enough condo buyers selling with equity from their condo to go invest in the towns. And you've got some of those towns that are just sitting there and struggling. So I think that's an important note when you and I are talking about why the condo market is so important to the health
Yeah.
of our general housing market. This has been something we've been seeing kind of steady now. We've seen another month over month decline in terms of median condo price. We moved from 675 last month down to 655. Transaction volume continuing to fall. Like again, here as we've seen prices continue to correct, I would have loved to see some more transactions kick into the market, but we're down 20% month over month and down 37% year over year when it comes to condos in York Region right now.
Yeah, I think a 6.4% year over year decrease at this point in the year is quite a significant number for condos. And then month over month to be 3% of that
Yep.
is quite staggering. And there's still a lot of condos that are coming online for new builds that are getting thrown out there as well. And then there's a lot of condos being moved off of MLS as well.
Yeah. And so now let's talk a little bit about our new listings. Again, we saw a little bit of that pause from March to April, then a big uptick now again in May. But the steady line is going to be there in our active listings as we've seen more and more come to the market and then stay on the market as we've seen those sales volume numbers falter. As we can see here, our median price, we're just about to cross under our 2021 pricing. As we look there in the freehold market, we were still outpacing 2021. It is more likely that by September we'd be under, but if this continues, it'll be interesting to see if we see a more drastic dip in our summer months or finishing up what our typical springtime would be to cross under those 2021 numbers.
Yeah, we're very close to that.
Yeah. And then looking here at our months of inventory, what's that, Matt? We're over 8 months now in terms of what we're sitting.
8.85.
885. So we're just under 9 months in terms of months of inventory. So the amount of homes that would need to sell if we started selling, if we're selling homes at the same pace we are now and no new condos enter the market, it'll take us almost 9 months to clear out all the inventory that we have. And that's if nothing new enters.
I originally started putting Peel and Waterloo condo stats into our slides because it was a pretty drastic chart to show.
Mm-hmm.
And just recently, York Region is starting to trump that in my view of just how much volume and inventory are sitting on the market here. It's really blown up. As you can see with the months of inventory, we weren't too far away from just 5 months.
Yeah.
And now we've exploded to the upside here, and it's happened quite quickly.
Yeah, this is a big acceleration. Like we had seen
This is condo and condo towns.
Yeah.
Still.
We had seen a slow and staggering condo market last year, last spring even. We were still having those same challenges. And then this is just in the last few months that we're seeing this exponential increase in terms of months of inventory in particular.
It's a lot.
Yeah. All right, let's talk new market and specifically looking at our freeholds in new market. New market had been doing so good. We'd been seeing them post some decent numbers, and again, all relative in comparison to the rest of the market. And then last month, we saw a big change in our month over month change of median price and a decline of 8.5%. Matt, that's a staggering number to me when I'm looking at freeholds here in new market.
Yeah, it's a big decrease. I think it's because we went from 55 sales to 72, so there's a little bit more data. I think the bigger number for me will be year over year at the 9.3 because it was 77 sales versus 72 sales. So it's a bit more averaged out number there. So a 9.3 decrease. It's the 30, we've had a 30.9% increase in transactions, which in an average market, you'd be like, holy crap, like that's unbelievable momentum. But then you see a 30.8% increase in new listings. Yeah. And it basically just washes it right out to a degree.
Again, and the relativity of like, okay, let's compare this May to what last May would be. We're not talking pricing, just what would typically sell in a month of May in the market. And we're still down 6.5% in comparison to what we were doing last year. So yeah. I think that is one of the challenges. And like you said, looking year over year, down 9%. Our transaction volume, we haven't talked about this too much on the other slides, but it is important to note, like our year to date change, 2025 is down 33% in comparison to the same time frame last year when looking at freehold sales in new market. So there's just not as much activity, not as much buyers out there looking. Now, what is interesting is we did see a lot of buyers enter the market in comparison last month. We had a nice month over month change with increased sales volume. And what that helped do was bring down the average days on market, or sorry, median days on market. We brought that down from 20 to 15 in a month over month basis. Comparison to the previous year was at 12, but still not bad. I think that's a good change, but that just shows that people were entering and buying, but they were buying at some good prices.
Yeah.
Okay. Right in the mix of where we would expect new listing volume to be. Like you said, it's not the amount of new listings hitting the market that are the real challenge the market's facing. It's more so when we come into and we see that sales aren't moving, we're seeing these active listings continue to stack on top of each other. Now, unlike the condo market, we're not the highest we've ever been. We have had previous years that were higher, specifically like our 2018s, 2019s, a little bit of 2017 there. So yeah, kind of that stretch as we look through our fixed rates, like our bond market, looking at the other times that it was high, boom, right there, our 2017 to 2019 stretch. This is where it equates, and new market is feeling that effect. And here we are in terms of our sales volume. So at least it has been trending up through the spring a little bit, but we are the lowest we've been in those last 15 years.
Yep.
Median price, we are still above 2021. That is going to, I think, I got to imagine that we see a little uptick here in the month of June. I don't know if we'll cross over 2021. Matt, what are your thoughts there? We didn't get the rate cut for the start of June. Do you think we've got enough momentum to turn this thing around and stay above 2021, or do you think the freeholds in Newmarket are going to cross underneath?
They're going to cross underneath.
Yeah.
And I'm wondering in my head how close we're going to get to 2020 by the end of the year.
Yeah.
Because we weren't far off 2020 in 2023 and 2000. What was the gray one? 2022.
Yeah.
Which is incredible to think right now. But we were seeing an acceleration to the upside in 2020, so that's why it's on the higher end there. But I mean, you just look at the trajectory of that line and going into a potentially slower market, unless there's drastic changes to tariffs and some more spending in the economy and some interest rate cuts. We could very well end up above the red line and somewhere maybe close to where we were at the end of 2022.
Yeah. I think if buyers are looking at the recent sales that happened this month and they're using those sales as their comparables for what they think value is going to be, it just makes sense that we're not going to be able to get this to turn around quick enough to stay above the 2021 numbers.
Yeah,
But
the only acceleration we see in this chart was at the end of 2020 and the end of 2021 when interest rates were below 2%.
Yeah.
For variable or for fixed or close to it.
Yeah.
We're not there right now, so it's hard to see an acceleration to the upside unless there's some drastic change.
Yeah. Now, our months of inventory did face a better rollover here in terms because we saw those transactions uptick a lot last month. So it has come down a little bit. It's just 4.5 months worth of inventory. So much more balanced, leaning towards buyers than some of the other ones that we saw. Obviously, the condo market being up there almost at 9 months for York region, but still high. You can see how it tracks. We're above the 2018 numbers. And for those of you that were selling real estate in 2018, you remember how slow some of that was, how much inventory, how hard you worked to get some of those units to move. And that's kind of where we're hovering right now. So we're not out of the woods there yet. And like you said, I think when we look at this, that's one of the other indicators why we think this price will come under the 2021 numbers for the month of June. But I look forward to being wrong. I'd love to see that rebound.
Yeah.
All right, let's talk about Aurora Freehold and jump into it here. Aurora, unlike Newmarket, we saw a slight uptick in median price of 1.8%. And I want to give a shout out to agents in our office that are selling homes in Aurora because I've seen some fantastic sale prices. So I'm going to give Keller Williams all the credit for Aurora right now being up that 1.8%. Unfortunately, transaction volume was down. We're down 8% month over month. And Matt, this number is, again, we're looking better than what we saw in Newmarket. We're only down just about 3% year over year for that median price. So Aurora, in comparison to Newmarket right now, is doing a fantastic job of holding its price as steady as it can.
I think Aurora is a premium asset to hold. I think if you're buying in Aurora, you're buying, you know, a solid asset, and it holds its value better than a lot of other towns
Yeah.
for that exact reason.
Yeah. Now, what we do need to turn around here, of course, is our sales volume. We're down 35% year to date in comparison to last year, down 22% to the same month last year, and down 8% on a month over month basis. So we did see people hold off a little bit there in the month of May in terms of keeping that momentum going. Termination volume has settled down. It's still up 11% month over month and up 34% on a year over year basis. But these numbers are lower than what we were looking at earlier in the year. So I think as we're seeing medium price balance out, uh, what's happening is we're seeing less terminations as people I think are getting their homes priced sharper for where the buyers are actually seeing some value.
Yeah. And I love the termination volume stats because at the beginning of the year, it really showed us that people were just priced way too high,
Yeah,
and that they needed to make adjustments, and they needed to understand that they weren't going to potentially be in a raising price environment here. And the termination volumes was screaming at the hilltops that you better start pricing it more competitively, or you're going to be sitting on the market quite a
you're gonna
bit
be
longer.
exactly. And I feel like we're starting to get the message there. When you see this, we are up 56%. We have 56% more terminations year to date this year than last year, and that's as people are adjusting and getting dialed in on their pricing.
Mhm.
Now, new listings volume, we're a little bit higher than being right in the thick of it, but we're trending to what is normal. I think that this is kind of holds true across a lot of the areas that we're watching, Matt, is the amount of listings hitting the market is pretty similar to what we've seen in past years. It's that the active listings are shooting up because our sales volume's been so low.
Yeah.
And when I look at this, the question will be, like you said on one of our previous ones, do we get the traditional rollover? Because all of them, except for 2020, we typically see May being one of the higher months for new listings, and then we start to simmer down for June, July, and August. The question will be, do we get that, or does this push forward?
And I think, you know, if it pushes forward, it's going to continue weakening the price.
Yeah,
You know, we
yeah,
if it rolls over like it has in the past, then we can see a nice leveling out. I
yeah.
think prices are going to start to level out, and we're not going to see any drastic decreases. But if that new listings does go to the upside, and sales continue their stagnant ways, then yeah.
Yeah. Okay, coming into active listings, you can see we're only being outpaced really by 2018, and I think this is 2019. Matt, correct me if I'm wrong. 2019 was
The gray one
274. Yeah.
is,
Yeah.
yeah.
So our 2018, 2019 numbers is where we're getting up there in terms of active listings for freehold properties in Aurora. So yeah, I mean, that's where the downward pressure comes on pricing, which is the amount of choice that buyers have. But of the homes that are selling, our median price actually went up last month. So people are seeing value in where those homes are priced. Now, when we take a look at sales volume, this is true across the board. Is we are just barely hanging out there above our May numbers, or sorry, our 2020 numbers when people were in lockdown. We are still well below really the other 15 years that we're looking at. And our spring just hasn't happened. We would expect to be up there. Our new listings are right in the mix where everything else should be, but sales volume is hanging out well below.
Mhm.
Median price, maybe Matt, this is where we're seeing the month over month growth is because we've already dropped below what the 2021 pricing was
Mhm.
when we're looking at freeholds in Aurora. So that's interesting to see that we have officially come under 2021 from our April to May, and we were down there below as well. So
Yeah.
interesting to see. I think the Aurora just maybe corrected earlier in that sense.
Yeah, I mean, I start the Aurora program off by saying it's a quality asset, while it's dropped below its 2021
Yeah.
numbers. But having said that, look how tight that range is
Oh
for
yeah.
the month of May, right? It's not a massive. If we look back at some of the other ones, there's quite the gap in between prices in May. This is a tight one, and also we are starting to curve to the upside, whereas a lot of the other ones are still trending to the downside.
Yes, exactly. That's a great point. Like we've kind of hit that and moved forward. So we'll see where that ends up for us when we're looking at our months of inventory here. It has crept up again Like we kind of rebounded down, which was nice, but we're creeping back up there. We're at 5.67 months worth of inventory, trending more so to the buy side. So again, great opportunity to get into Aurora in comparison to where it was. If you're buying now, you're buying at essentially pricing from over 4 years ago.
Yeah.
And there's not a lot of opportunities that you can look at the housing market and say, I can get pricing from 4 years ago today. I think that that's something that buyers need to consider. And I know that there's so many other factors going on, and it's tough to look at these times and see opportunity, but there is opportunity there. And it's always when you're in the moment, you can't see the opportunity. You're lost in the forest. The trees are in the way. But when you get out to the other side and you look back, you're like, well, that would have been a great time to purchase something. And every time you look at those charts spread out over a 30-year average, it goes like this, right? There's dips in between. And if you can buy the dips, fantastic. It's got to make sense for you and your family. But this is one of those dips that you could be buying in if you
I
chose to.
think, you're under the 2021 price,
Yeah.
even though it's tight up against a lot of the other years.
Yeah.
I've done a bunch of open houses in Aurora over the last month. Tons of people coming through. The places that are priced right, they're getting multiple offers on them. But there's still a fantastic price to be had for anyone looking. I wouldn't sleep too long on Aurora right now.
Yeah. Well said. Got our months of inventory covered there. Again, Matt, talk to me here when we're looking at just our detached pricing. And again, you can see where we were there for May 2021. Just kind of that flow in terms of our sales volume there and our median price. We are, again, if we're looking at just detached, we are below the 2021 numbers.
Yeah, so I included this chart 2 months ago. It shouldn't be here anymore. We should probably take it out. But I was wanting to show that we saw this big uptick in March for median sale price. But I think it was mostly just to do with the fact that there was so little sales. So we just didn't have enough data points. And now that we've seen the sales rise, we've seen the prices kind of dip down again as we get better data points to show where prices are heading, which is still trending to the downside when you take the blip out.
Yeah. And again, when you look at it, that sales volume, we're sitting at, 32 units in comparison to 40, 57, 39, 82 there in 2021. Yeah, so we've got a little work to do. All right, Georgina, Matt, I'm going to give you this one. Talk to me about the freehold market here in Georgina and what we're starting to see over there. Because
So
not bad. We need
it's
to
not bad at
correct this
all.
color here just real quick. This
And
should
let's
be
fix
red.
that up.
Yeah.
So actually, that is red. For a second there, I was like, "Damn, they went up 6%."
Yeah.
Okay, so yeah, they were down about 6% month over month, and then year over year, 10.4%, which is one of the biggest ones we've seen today. So
Definitely. Yeah.
it was a tough month, month over month for them, even with 47.7% increase in the transactions. So you know what? I thought that they were trending in the right direction. But last month was a tough one for the Georgina market, that's for sure. And new listings was up 20.3%. It didn't outstrip the transaction volume. Termination volume, though, I think we're really close to where we should be, right at 2.7.
Yeah.
So
This
it's
has got to be the
showing
lowest we've seen.
yeah. And even when you look year over year, it's actually a negative
Down. That we haven't seen that at all.
at 8.5, right? So the
Yeah.
pricing's in there. I'm going to assume that likely more smaller homes sold in this market, and that's why we're seeing the 5.9%.
Yeah.
But I
I
think
agree.
prices in this area are reflecting where buyers are willing to pay. I just think it's likely smaller homes that changed hands, which drove it down the 5.9%, which then also affected the year over year to quite a bit of degree as well.
Yeah. Yeah. I think that's part of the challenge with us when we're looking at these stats is because our sample sizes are getting so small just with the amount of units selling. It doesn't always tell the whole story when we look at that median price. It does its best to kind of keep it as apples to apples as we can and remove some outliers. But if the bulk of these were smaller homes, then that's why you would see that median price come down, because we're seeing other indicators here that show a much healthier market than what that 6% drop would indicate.
Yeah.
New listing volume. We're creeping up high. I'd say we're not right in the mix of what we would usually be. We're a little bit more to the high side there as we're seeing
Yeah.
new listings entering in. And when we look at that, it does equate to a pretty high active listing amount in comparison to other freehold markets that we've been watching. So they are creeping up in comparison to previous years. And that sales volume about the same. We're still below basically everything other than 2020. I think it is there. So
It is a nice uptick in the sales volume compared to a lot of other
it,
places we're
it,
seeing that are very
no
flat line
doubt.
and stable.
Yeah,
That's a
agreed.
nice uptick because it was a very flat year for sales there, and so the nice uptick was good to see. But I will say, with the updated data from this year or for this month, that Georgina's starting to struggle a little bit more than I thought they might have
Yeah.
with the new data points that are out.
Fair to say. And I mean, here's that with that decrease we saw there, they're well now under the 2021 number in
Yeah,
comparison. We're at 775 in comparison to 846,000 at the time. So these guys have rolled under. I could see this kind of leveling out, hopefully,
I
but
think so. I wouldn't want to call it until I saw next month's data. If next month's data is worse than this, then there's a problem in
then there's a
Georgina.
problem. Yeah,
Yeah,
agreed.
I think you look at the last 846, 883, 880, 865, and then all of a sudden we're at 775. I
Yeah.
think just smaller homes traded hands. I'd be interesting to see that it probably gets back up to the 865 or 850, 860 range.
Yeah. Yeah. I'd feel comfortable with that. Even low eights, I'd be okay with
Even low
seeing
eights,
that
yeah.
change. Yeah. And let's take a look at the months of inventory. We're sitting at 5.3 months there. And so we've been going up and then finding and then coming back up and down. So that's where we're sitting right now. Still very comfortable into balanced, leaning a little bit more towards buyers, specifically for how we evaluate those months of inventory. So all good stuff. All right, Matt, Simcoe. We've for the last year now, we've been talking about great value out there in Simcoe. Talk to me a little bit about what we're seeing there in the freehold market in comparison to some of the other areas we've seen.
Well, we've actually seen a price increase of 1.3% month over month with 12.2% transaction volume increase, all while new listings were up 38.7%. So that's really good
Yeah,
considering we saw such a massive increase in new listings hitting the market. Termination volumes were actually quite high here at almost
yeah,
50%. So maybe there was a lot of price adjustments in the Simcoe area last month that resulted into sales. I don't see above list prices down, so it's not that they were pricing them below market or anything like that.
hmm,
But even the year over year to just be 2.2% down, like that's not bad. I think a lot of people would take that.
totally.
And even
Yep,
year to date, just being down 2.2. So that's a market that's definitely stabilizing, at least from this data point that we're seeing.
yep,
But the new listings volume was surprising at 38.7.
yeah, agreed. You know what's interesting to me here is looking year over year, only being up 4% in terms of new listings is kind of interesting.
Yeah.
In
Yeah.
comparison. And again, I think what that comes back to is our new listing inventory has held stable to a lot of previous years. Like we're in the mix for what you would expect for the amount of new homes hitting the market.
Yeah.
It's just comes down to not enough of them are selling, so our active listings are stacking up there.
Even the year to date new listings is actually down 2.6% compared to what we saw last year. So that's a great sign as well.
Yeah. Sorry, let me just get
Did
my
you
cursor
we
here.
froze?
No, hopefully I'm good.
Okay.
All right. So again, kind of in the mix. We're maybe going a little bit more to the high side, but if this rolls over, I think we're good. I think that it's holding true to what we
Yeah.
would expect for May. We just need to see this roll over
So
instead of continuing to go up.
yeah, like look at where we were at February. We were like I was looking at new listings come February, and I'm saying to myself, wow, like this is going to be a great market to participate in on the for sellers and for buyers. But it's really
Yeah.
shot up to the high side. They definitely were a little bit behind the curve on getting properties to market, and now it's accelerating to the high side here. So yeah, if it rolls
Yeah.
over here, I think we're okay. But if it continues to break through and make all time highs, then then things are going to break down a little bit over the next couple months.
Yeah, big increase from April to May there in terms of new listing inventory. Active listing holding steady, but here again, this is the difference that I think we're seeing in Simcoe to other areas. We're not outstripping a lot of years in terms of active listings. There have been many years with more active freehold listings than what we're seeing here in for the month of May.
Mm-hmm.
So interesting to watch there for Simcoe. Now, sales volume. Again, this is where the challenge is lying. We're just not
Yeah.
moving enough, and we're well below. Even in some of the other areas we were watching, we sold more homes in that first lockdown, those lockdown months, but we're well below that here. And obviously, it upticks from there. Until we get more people in here buying, I think that will be the challenge for Simcoe, despite them looking a little bit more dialed in than other areas in regards to their pricing.
Yeah, that's wild. That's wild to see the sales volume that low.
Yeah. Looking at median sale price, just below 2021 by $1,000. So median price
Yeah.
now currently at 775,000 in comparison to 2021, which was 776,000. This is about the turning point we're seeing across all areas. Is we're just either hovering just above 2021 pricing, or we're just now dipping below 2021 pricing. This is obviously pretty much right on the mark. So we'll keep watching it. There is definitely a chance that this does continue to cross below this edge, especially later in the year when 2021 pricing really accelerated in the second half. So,
Yeah.
we'll keep watching it. Our months of inventory obviously ticking up now, very healthily in a buyer's market at 6.3 months worth of inventory. So again, buyers, you have a lot of opportunity in Simcoe right now to take advantage of it and get in there and be able to buy from pricing 4 years ago. Excuse me. All right, Matt, talk to me a little bit about the above list price percentage as we're looking here in Simcoe for
Yeah,
freehold properties.
It's a lot lower than most places we've looked at. Only sitting at around 11%. For most properties out in the Simcoe area, they're pricing it at where they're expecting to get it, or just a little bit above that. So they're not getting a ton of sold over asks. And, at this point in the game, that's to be expected. I think the prices have come down quite a bit in the Simcoe area, so that they should still be attractive to buyers out there. But for whatever reason, we're not seeing that sales increase, regardless for the amount of homes that are trading hands.
Yeah, we see that rollover. They had a little month there at the beginning of the year where they were trending upwards, and not so much anymore. All right, moving into Barrie, specifically looking at the freehold market within Barrie, we did see a slight decrease there month over month when we're looking at our median price. We're down 2.5%. Transaction volume pretty much holding steady. We sold one extra unit there. Median days on market going down just a little bit, down a day, not bad. Termination volume pretty high. We're at 40% increase month over month. And Matt, when we look at our year over year sales volume, there it is. There's that 30% decrease. We saw some of that reflected, obviously, in the Simcoe chart. Our year over year pricing being down just under 6% at 5.8. Year to date change in comparison, this number is not bad. Only being down 2.8% year to date in comparison to last year.
Yep.
Transaction volume being down a little bit more staggering of a number, but again, holds true to what we've been seeing and what all of our graphs show. I don't know if there's anything else that stands out for me here. New listings being up. It'll be interesting to see our chart how that stacks in comparison to previous years. Yeah, in the mix. Again, good increase here from April to May, which is not uncommon. We've seen some big years. 2018, we saw a big increase there. Again, 2020, looking at the start, it was a rocket ship the way it took off. And we sold our home, one of our last homes, in December of 2020. And we purchased, thankfully, a month later. And Jen and I had said, if we didn't get the one that we got, it would have been so challenging for us, because this is how 2021 started. Not just in terms of, obviously this is a new listings chart, but if you look at median sale price in a lot of areas, this is how sale prices were going at the start of 2021. And we caught the window just perfectly before that uptick. And we were so grateful that we did. Otherwise, we might have got trapped in the in between of how crazy that
Yeah.
went. Active listings not being the highest we've seen, but we are starting to creep up there among some of the higher years. Obviously, 2018, 2019, and even 2017, still the years that we talk about the most in terms of those active listings where we start to see stuff pile up, especially now that April has passed. 2017 will definitely enter that conversation. Just one of those things to start to keep watching. I wonder if we need this really flat sales volume for 2025. Like, Matt,
It's
this,
staggering how well the new listings chart and the active chart is holding up with the sales being like that.
yes,
So
yes,
I think a lot of people are taking their property off the market and
I think
just
so.
not needing to sell
Yeah.
clearly, because those should be record high numbers with a sales volume
Yeah,
like
with
that.
if you're looking at sales volume like this and new listings still trending higher than a lot of other years and your active listings starting to creep up there too, like it it just should be so much higher. This should be
It
so
should
much
be.
higher.
So you know what? There's not a lot of desperation in that market. It tells me
Yeah.
that people are just like, you know what? It's fine. I'll just wait. I don't have to exit. Whereas if you see a sales volume like that in some of the southern areas, you're making all time highs for active and probably new listings. Well, at least the active listings.
Yeah.
If you're having sales like that, because I think there are probably more people a little further south that probably need to get out, and that's why.
Yeah. I don't know when this comment came in, but I want to highlight it. I think I can get it into our broadcast here. Maybe I can, maybe I can't. I don't know. That is crazy. Yeah, agreed, Megan. I don't know what part you were saying it to, but looking at this chart, it's probably the most fitting to just see how flat that sales volume is.
Yeah.
Um, yeah, I'm gonna bring Stacy in here as well. I'm noticing listings come off and not going back on in Barrie. Yeah, Stacy, that's exactly what Matt was just saying with our data too. So it's great that you're seeing it firsthand, because that's what the chart says. Like, if with sales volume this low, how is our active listings not way above what we've seen in the past? Let me get my chart back up there. See, it's still kind of in the it's a, trending towards the high side, but this would if everything else was the same, you wouldn't be worried about active listings being at this number, right? So that just says exactly what you and Matt are seeing. So people just aren't relisting. Matt's the sense there that you're talking about is people. There's not the desperation. I'll take it off the market. We'll wait,
Yeah. When you
right?
see a termination volume that high and then a price increase, like it doesn't add up.
Yeah,
So clearly the termination volume is to terminate and not relist.
yeah,
At least a decent chunk of that is what's going on.
yeah. Makes sense. Megan, Stacy, thank you so much for joining in the conversation because that added context to what we were seeing in the data. Okay, looking at median sale price, this is another place where now from April to May, we did see the crossover to 2021. We are going to see this in a couple of areas, if not like as we've seen, not yet. We're going to start seeing them in their later months, June, July, maybe the summer. Definitely in a lot of areas, definitely come the fall. But yeah, we've now in Barrie for freeholds, we've crossed under the 2021 pricing. This goes back to like just trying to share that story with buyers. If you're able to now, this is a clear sign you get to buy from 4 years ago pricing, which rarely ever happens in the GTA housing market, just housing in general. So, there is opportunity out there. It's just, is it right for you and your family to take advantage of it? Right?
Absolutely. And also for anyone transacting in the Barrie market, like steal these charts
Yeah.
because it's going to give your clients great insight
Mm,
as to how you need to price the property and how you need to be very aggressive in this market, especially in Barrie, if you want to transact,
yeah.
because that transaction volume is stagnant.
Yeah. And again, it does look like we're trending upwards more again in terms of our months of inventory. We're at 5.26. So again, balance leaning towards the buy side, much more comfortably in the buy side than we've seen in some other areas. And that's where we're looking at for Barrie. Now, let's take a look, Matt, into Simcoe, particularly in the condos. I know most of this is really Barrie anyways, but as we come into here, we saw some big corrections here previously. And now we're starting to see a little bit more maintaining, at least in terms of our price, obviously down from last year, but our month over month basis is bang on the same and down 7.5% year over year. I think that outpaces the York condos, if I remember correctly. maybe I think we were maybe 6% down there or 6.9. So Simcoe just overtaking that slightly. Our year to date change on the transaction volume is is not terrible, down 14% again in comparison to other areas. And we got to turn this one green. Our transaction volume actually going up 44%. So nice to see that in terms of what's going on in the condo market there in Simcoe. Termination volume being up, yeah, 27%. That's getting a little bit higher. Obviously, year over year, for up 46%. They're still adjusting. Seeing the price, seeing such an increase in sales volume and the price maintaining, I think that means that they've hit their spot. They're in a sweet spot right now in terms of pricing for the condos. I don't know if we see much more of a fluctuation to the downside. Um, I'd
No,
say it would stay marginal, if anything.
yeah, I think sales are going to start like you're talking about. Hold on, I lost the chart here. You're talking about 495,000 for a median condo. Like,
Yeah.
I think that's pretty well priced. And when we go look at the sales chart for how it compares, I think it's going to show that there's going to be quite the uptick there. I think as long as new listings don't absolutely explode, surely the market's bottoming out here for condos. I think these are well priced compared to a lot of other places for this price point.
Yeah. Now, we did see that uptick there in new listings. Again, this is on the high side in comparison to other years. A little bit of a different story in comparison to other markets that we're looking at, both freehold and condo, but really upticking there in terms of our new listings. Active listings, it's obviously the highest been. We're talking about the condo market again, right, Matt? It's got to be the highest it's ever been. But we are
Yeah,
seeing it slow down a little bit. At least it maybe this levels out. We'll have to see. We're going to increase our chart again next month for
I
sure. I
think
know
so.
it's
I
going
think
to go up, but does it continue to flatten?
Well, go to the next chart and it'll explain why we're seeing
Yeah.
the level out because we're seeing a nice
Let's
increase here.
let's
Will it follow the 2022 the 2020 chart? I
Oh,
don't know.
wouldn't that be nice?
That would be insane. It kind of it looks very similar pattern, but I think that you're gonna move your way to the upside now just based on where the price point is.
Yeah.
Again, it's all going to come down to how much new listing hits the market, but it's a great sign for the condo market in Simcoe that maybe they've hit the price point people are okay with, and we'll start to see some activity there.
Yeah, I like that. Median price, they've been under the 2021 numbers for a little bit.
But it's
But
like it's a nice
it's
steady couple
following it.
months in a row where it's
Yeah.
been level. That's a great sign, and maybe it'll start to move its way up if we keep getting those new sales.
Yeah, it's interesting to see the 2022 line up there and just that how big of a jump, that was. Even 2021, it went up 100,000. The condo market went up 100,000 in the span of 1 year. In Simcoe of all places. So you just know when those numbers start to hit, it's not sustainable.
Yeah.
Um, yeah, I think that's the important thing to be watching. We did see month of inventory rollover because we saw so many more sales kick in, which is fantastic. We are still really high. It's at 8.11. So we're very comfortably in a buyer's market there. But hopefully what this means is we've hit our peak, been trending upwards for quite some time. We rolled over here. Hopefully this doesn't shoot back up anytime soon. All right, taking a look at the rentals in York region. Um, Matt, we've consistently seen a little bit more of a softening in the rental market in a lot of areas, right? So we're seeing a slight decrease there in our median price month over month. So down just under 2%, down 7% for the year over year, and down 7% year to date change in comparison to last year. But we are seeing uptick in rentals in comparison to last year. Again, year to date, not looking at our month to month numbers, but we're seeing 11% more rentals this far in the year in comparison to previous years. It's interesting to
Yeah, I
see.
think there's a flood of supply that's coming to the market when it comes to rentals. There's a lot of people that bought condos, can't sell them now, so they're renting them. There's a lot of purpose-built rentals that have hit the market. There's a lot of people putting basement apartments in.
Mm-hmm.
So there's a lot of supply
Supply.
that's really coming onto the market right now, and that's clear in the data. But at the same time, the government of Canada has brought in another almost 900,000 people to start the year. So even though they said that they were going to take their foot off the gas, it does seem like that hasn't happened yet.
Mhm.
But there was such a demand and such a low supply that so many people in the last couple of years really started to build more and more purpose-built rentals. And we're starting to see that hit the market now, but it'll only be for so long, and then it'll start to cool off. And another thing too is a lot of condo buildings, if they couldn't sell their supply, they're out there renting it on the market potentially right now. I've seen a couple condo places with for rents in those buildings from the actual builder. So that's helped as well increase these numbers.
Mhm. And it's interesting to see, like we talk about termination, it's quite low in our month over month numbers. But again, if you're looking year over year, we're up 58%. So it's not the hot rental market that we used to be seeing. I know there's still a ton of competition out there for the right properties, but to see that termination volume up so high in rentals is interesting to see.
If I was to show you the lease volume chart first, you would say this is a hot market
Yeah.
because it's record. Like, go to the lease volume chart first before we show anything else. I think it's chart 91. Right? So you're
Yep.
you're at all-time highs for the amount of, so at first glance I'd be like, oh, the market's probably going to be crazy. But when you go back to new listings, you're at an all-time high new listings, you're at an all-time high, incredibly all-time high on the active
Active
listings,
listings, but
but then you've also got
we're renting a
incredible
ton of them.
demand. Yeah.
That
So it's
that
just
might be
that,
one of my most interesting charts of the day when we look at
yeah,
that, because you're just
yeah.
record high across the board
Your record high in everything, right?
in every
So
category.
it's whatever one's going to give first, right? And it looks like the lease volume is the one that's going to give
It
first.
does, yes.
It's starting to roll over right now, whereas the active listings and the new listings are still trending to the upside. So
Yeah,
I think ultimately in the short term that they're going to win. I think that rental prices are going to continue to come down a bit, and if that's the case, if we're in like, let's go to the price. So we can see the median lease price is the lowest it's been in the last 3 years.
yeah,
If rental prices keep going to the downside as well, there's not more of a need for them to rotate into the buy side if they can find new places for cheaper than what they might already be in now.
yeah,
So you might have to see that those potential people aren't jumping into the buy side. So that might have an effect on why sales are sluggish as well, for the condos and the townhomes and stuff like that, because rents are getting cheaper.
yeah. It's interesting because that has a breaking point too for landlords in general. Now we talked a lot about the purpose built rentals that have been hitting the market. That makes a little bit of a difference. But your
Yeah.
mom and pop landlords that are still dealing with higher interest rates, they have a threshold that they can bear where it's going to be a lot more of a loss. So again, it'd be interesting to see how this fluctuates. But where were we in 2020? It was 2,350. So I mean, there is still wiggle room to see this continue to go down in terms of what we've seen in the past. It might be interesting at some point to track this back further, just in the rental market in particular, because I'm just curious to know where that looks in comparison to our housing prices, anyway. But
Yeah, I'll update that for next year. And then this chart to top everything off,
yeah,
1.84 months of inventory. Like,
oh,
you look
it,
at those charts, you're like, oh my God, the active listings and everything, it's all time highs, it's crazy. But really, it's 1.84 months of
this
inventory.
so
That can get absorbed quickly.
So again, this is like, as a boots on the ground, this is the competition that it still feels like when you're out there trying to help a tenant find a place.
Yeah.
There's only 1.6 months worth of inventory. Everybody's moving for the same stuff. It is crazy to see that all these are at record highs. And then, sorry, I went a little too far there. Record high for new listings, record high for active listings, record high for lease volume, which is then what is reflected into our 1.6 months worth of inventory. All right, let's talk about Simcoe for the renters that are looking up there, or the landlords, and everybody's trying to keep track of everything. That same downward pressure on rents is happening. We're down just 2% there month over month, down 3.8 year over year. Now, I do want to go, I'm going to jump around here a little bit. I forget what we were year over year when we were looking in York. So I want to take down 7% in York looking year over year. That's where that downward pressure came on pricing. But when we look at that in Simcoe, not as drastic, down 3.8% in terms of our median rental price. Transaction volume being up 5.5%, but down in comparison to last year. Termination volumes not bad in comparison to last year, up a little bit in our month over month numbers. Yeah, interesting to see. Let's check out our charts. New listings still pretty high, just below like the third highest we've seen in terms of new listings coming up. Steady increase there. We did see a dip, a pretty big dip in February. You know what it is, Matt? Who wants to move in February? It's so cold every year. Let's
Nobody
just
wants to move in
tone that
February.
down.
Yeah, and it's important for landlords. Don't be renting your property out in February on one
No.
year leases because sometimes it's just tough to
Yeah.
find that out. Try and rent your property out in like September,
Yeah.
October, somewhere around
Line
there.
up with the school years, you know?
Yeah, line it up with the school year, so maybe even August, and
Yeah.
you'll most I find most of the time they move out around the same time, and
Yeah.
then you get better tenants. So you're not doing it during the wintertime.
Yeah. Taking a look at our active listings, we've kind of stabilized a little bit here, come down from earlier in the year, which is interesting to see. Obviously, still higher than a lot of the years. Look at what we used to see here in terms of active listings. It just goes to show the amount of rentals that started to move into the Simcoe area, right?
Yeah,
And
it's
I
huge.
remember when COVID hit, I was trying to help an investor up there, and just before that, all of our comps we were looking at, you could buy like kind of a bungalow duplex style for around 8 to 950, and then all of a sudden, all of those were 115, and it just exploded. There were so many people buying those, and I think that's where you start to see that's part of the example that we see as an influx in rentals up there because
If you
investors were
don't
able to
have
buy for so cheap at the
Yeah,
time.
if you don't have to drive to Toronto from Barrie every single day for work, it's a lot more. Um, you know, People would want to be up there if they were
Yeah.
working from home. You got the
Yep.
lake there, you got the ski hills and everything like that.
Yep.
Um, so during COVID, it was a very popular place to be.
Closer trip to the cottage. Can't
That
complain.
that too. Yep.
Yeah, our lease volume is up there, so there's still a lot of stuff that's happening just below two of our other higher years. Taking a look at median price, maintaining a little bit better than like what we saw uh, there in York. York was down at 7.9% year over year, which is crazy.
Yep.
Um, we are trending downwards a little bit. We'll see if that continues. And our months of inventory hovering at 2 months. So again, still competitive in the rental market there
Yep.
in
Very.
Simcoe. All right, everyone. Well, thank you so much for joining us today. That was our monthly market update for the economics of real estate. We will be breaking this video down into the specific regions. So if you didn't have the time or energy to stick with us throughout the whole day today, do not hesitate to check out our YouTube channel where we'll have those broken down into bite-sized bits for you. Steal the charts, use them with your clients. If you want to talk real estate, if you want to be a guest on the show, let us know. We'd be happy to join in and chat with you about what's going on. I think that'd be a lot of fun. Matt, is there anything else that we need to share before we take off today?
No, I think listen, still have a positive mindset out there. There's still a lot of opportunities to make transactions. If you're on the sell side, you just need to make sure that you're pricing your home competitively in a competitive market. And then if you're on the buy side, just because there's another couple offers that came in on a property, I've been in at least three in the last month where we've come in $20,000, $30,000 below ask, and still we're very competitive. We lost out on one 20,000 below, but we had a condition for finance, the other people didn't. So
Yep.
plenty of great opportunities buy side. Be competitive on the sell side, and you can still have a lot of success.
Well said. All right, everybody. Thank you so much for joining us, and we will see you again next month. Bye for now.
See you guys.